Well, welcome back to Market Sense. By the way, a few stocks, I don't know if I spotted them. BEML, we spoke about it. The news bit, of course, was that BEML is going to expand the vendor base. This came in the newspapers. That stock is extremely active today, up close to 12%. There is movement in Gulf oil today. Yes Bank, despite the news bit that came out of the Supreme Court, is doing extremely well for itself. Look at, the oil and gas space in general has done well. Banks have done well, and Yes Bank continues to move higher. 3.5% or almost 4% for Yes Bank at 375. So good going out there. Let's get in Nitin Jain, Head of Retail Capital Markets at Edelweiss Financial Services. He joins us right now on the show for a fundamental check. And Nitin, good having you as always. Thanks for joining in. A lot of traction, Nitin, in the private banks in particular in today's session. Now, what is this? Is it the stocks that have a significant weightage on the sector not being bought until now, and now with the hope rally continuing that people are getting into private banks?
I think that's the nature of the beast, unfortunately. I think there was a time not more than 4, 5, 6 months back when, everybody was writing off banks, including private sector banks. And there was a reason for that. I think the NPA crisis still, is not over, and there are issues around the balance sheets. But see how the way sentiment moves is very, very fickle. And right now, if you have a positive sentiment on the Indian economy, and if you think election can be a big catalyst, then banks are a brilliant play because they're trading at good quality. Private sector banks are trading at 1.2 kind of book value. And I think people are now playing out that hypothesis that maybe things are bottoming out, and post-elections you can see a far more buoyant capex cycle, which will probably take away focus from the NPAs that we've been talking about, and growth will come into vogue. And I think that's very natural. I think they were under-owned, they got beaten down by 10, 15, 20%, good quality stocks available at cheap prices, and now they're getting some attention.
Nitin, everyone seems to be jumping onto the bandwagon, advocating buying into capital goods stocks with hopes of a turnaround in the overall investment cycle. Are you buying that argument?
See, I think you have to be very clear about your core hypothesis. If your hypothesis is that we have bottomed out and the economy has a very high probability of a upturn, even though it's marginal, and even though if you think 1.5% incremental GDP growth can be achieved and the sentiment is turning, then I think most of these capital goods stocks can be multi-baggers from these levels. But how much pain you have to go through will be a function of when the capex cycle takes off. It can be 1 year from now, it can be 2 years, it can be 3 years. So a lot of these stocks, including stocks like L&T, which have rallied 40-50% from the bottoms, can easily be doublers in 2-3 years if that hypothesis plays out. And if that hypothesis doesn't play out in 6 to 12 months, you would see these stocks again going back into significant pain by maybe around 20, 30, 40%. People will dump these stocks, and a new fresh set of investors will come and start to pick those stocks. So I don't think it's about these capital goods stocks. It's a core call of the economy, and based on that you have to take your calls.
Interesting. So if you're saying that there is a likelihood of, if things going well, then these stocks to be multi-baggers, is it the MNC cap good names that you're thinking about, or is it the space at large? Because we've had numerous reports the last 1-2 weeks about how sales of the MNC cap good companies could expand multifold because the exports will increase, and there is increased focus from the global parents on the Indian MNCs.
Absolutely. But just remember, the stocks, these MNCs that we are talking about, they are already at reasonably expensive valuations. But if you look at stocks like L&T, if you look at stocks like Crompton Greaves, if you look at stocks like Voltas, they have really corrected. They have corrected very sharply, available at very cheap valuations, even vis-a-vis their current earnings. And I think what can happen to some of these stocks is the earnings will get significantly revised, and I think earnings can go up dramatically if things turn. And when that will happen, people will assign far higher multiples to these companies than what they are currently. So you'll get in that sense a double boost. Both the earnings will go up and the valuation premiums will go up, and hence the returns that you can make on these stocks can be significantly higher. Having said that, if I have to bet, I will probably give allocations to even the MNC stocks that you talked about.
Amtech Auto is up 5.5%. Eugene is up in the session. So again, some of the auto component companies are making a move. And Nitin, I know you guys at Edelweiss are very bullish on Motherson Sumi as a stock, but this whole auto component basket is doing extremely well. Is Motherson still the best bet, or do you like something else, even from a slightly smaller second rung act of cap good companies or other auto component companies?
Sure. No, you're bang on. I think we are very, very bullish on Motherson Sumi. I think the stock has significantly outperformed the last year and a half. See, what can happen over the next 6 months, nobody knows. I mean, maybe the couple of other stocks might outperform the stock by around 5, 10, 15, 20%. But when we make investments, we look at sustainability of the stock, sustainability of the industry, and based on those parameters, we would still stick out our neck and say Motherson Sumi probably stands out very clearly in that segment. So if you will ask me for the next 3, 4, 5 years, I would still say Motherson Sumi is probably your best bet in that space. And like any other sector, any other stock, I think a lot of churning is happening because people are right now scampering to buy. I mean, you're suddenly feeling that the core hypothesis that the markets are not doing well is not proving right, and you have to buy something. The first wave, what happens is that everybody goes up because you are looking for any stock that is underperformed. But I think after the first 2, 3 months, you will start to be a little more, picky and choosy in terms of, which stocks to buy, which companies are doing better. And when that phase starts, I think some of these leaders in the industry will do much better.
Okay, Motherson Sumi continues to remain the favorite. Thanks very much then, Nitin, for taking time out and joining in.
Thank you.
Prakash, before we let you go, are there any other trading recommendations?